Is a reverse mortgage a good idea or a bad idea? That is the subject of this episode. Now, I would not be a true holistic planner if we were to ignore the reverse mortgage. So we need to understand it. You want to understand that all the financial tools have pros and cons, right? They have strengths and weaknesses. And it's not about is one bad and one good. It's about what are the strengths of this financial tool and what are the strengths of this one, and what is the right combination that will produce the most dependable retirement income for you. So a reverse mortgage has to be considered and should be understood. It's not for everyone. Not everyone needs a reverse mortgage. But housing wealth is where a lot of people have most of their wealth, right? It's in the walls of your home in the form of equity. Now, reverse mortgages in the past have had some negative aspects to them, right? And there's some horror stories. But one of the things you need to understand is that the laws have changed, circumstances have changed, and many of the undesirable aspects of a reverse mortgage are no longer there. And so the HECM Reverse Mortgage has become a very powerful financial tool that may or may not be something that you may want to consider. A lot of times people think that they will have less money to pass on to their children, feeling like having a house paid for free and clear is the most important thing. But if you're short on income, or if you're unsure that your assets are going to last throughout your full retirement, throughout your life and or the life of your spouse, then a reverse mortgage can make a very big difference. And not maybe in the ways that you think. One way would be, if you have a mortgage and you're over 62, it's a way to just basically turn off the mortgage, or the payment. You no longer need to make a payment. That all by itself could be a complete game changer. Or if you have a paid off house, it's really just establishing a line of credit that is guaranteed for you to access. Maybe you don't need to use it, but maybe you will. When you understand sequence risk and longevity risk and all the other things that could potentially deplete your assets in retirement, having a reserve in the form of a tax-free line of credit guaranteed by your house can be a very wise thing. Now, there are some misconceptions. And so today, I have a guest here who's I'm going to interview, and we're going to address some of these questions that you may have. So are reverse mortgages a good thing or a bad thing? And that is the subject today. And with me, I have Lynn Williams, who is a mortgage expert who focuses on and specializes in reverse mortgages. So Lynn, it's good to have you here.
Good to be here, thank you.
What are some of the misconceptions of reverse mortgages? A lot of times when you say the word reverse mortgage, people, they automatically think it's a terrible thing, a horrible thing, it should be avoided at all costs. Is that true? What are some of the misconceptions?
Unfortunately, there are a number of misconceptions. I run into this quite often when I speak with people, talk with people who are not familiar with the reverse mortgage as a concept. And most typically you hear some of the horror stories that people have been cast out or taken out of their homes, that they've been foreclosed on, that they're giving up the equity to their home to the lender, that the lender's going to take title to the home, that there won't be any proceeds remaining for any of the heirs in the home, that the loan balance could exceed the value of the home and leave them responsible for a deficiency in the loan balance. All of these are misconceptions that have grown over the years, in part as a result of people not staying in compliance with the terms of the mortgage, but more than anything, just a general overall misconception on what the product is and what it isn't, what the terms and conditions are and are not.
So a reverse mortgage is just a mortgage, right? It's a mortgage without a payment.
Correct.
So why do some people fear a reverse mortgage?
People, I find, fear reverse mortgages primarily because they don't truly understand what it is and what it isn't. It is a loan. It's a loan taken out against your home when its primary function is to provide seniors with an alternative means of being able to access equity in their home, which they would otherwise not be able to access without either selling the house or using a more traditional mortgage to do a cash-out refinance, or perhaps establish a home equity line of credit. Most people, with respect to selling their homes at that age, most of them prefer not to sell their home. If they've raised their children in their home, if they've been in the neighborhood for an extended period of time, that's where their friends are, that's where their neighbors are, that's where their church is. So all else being equal, most people would prefer to continue to live in their homes for the remainder of their lives.
So a reverse mortgage is a non-recourse loan, right? So what exactly does it mean, the fact that it's a non-recourse loan?
A non-recourse loan means that at the point in time when the loan becomes due, the borrowers will not be responsible for any deficiency that might be outstanding on that loan. So for example, the reverse mortgage, one of the features is that you never have to make a mortgage payment. Well, that's because those costs accrue on the loan balance over time. So that means at whatever future point in time the loan has to be paid off, they look to the property for the repayment. And the property is sold and the balance is due. If there's a deficiency in that amount, then that will be covered by the mortgage insurance that's put on as a result of the FHA guarantees. Significance of that means that neither the homeowner nor their heirs, if they passed away, will be responsible for any loan deficiency.
What are the chances that someone could be forced to move out of their house when they have a reverse mortgage?
Well, that would only happen if they cease to be the primary occupant of the home. One of the requirements of a reverse mortgage is that does have to be your primary residence, and that's determined by a timetable of at least living there for at least 6 months and 1 day out of the year. So theoretically, you could have a summer home in a different location, a winter home as your primary residence, and still be able to enjoy living in that summer home, but you would have to maintain residency in the primary for at least 6 months and 1 day. Unlike a traditional mortgage, you do not have to make a principal and interest payment on the home. However, you do have to continue to make payments and cover the obligations for homeowners insurance, property taxes, and any other association dues.
Which is the same as if your house is paid off.
Exactly.
A lot of times people think that they have to give up the deed to their home. Who owns the house with a reverse mortgage?
Contrary, again, to some of the misunderstandings, the title does not change when you take out a reverse mortgage. The title remains in your name and will include anybody who's been listed as a borrower. Typically, that's going to be a spouse or any other qualified borrower. In the event of your passing, depending on how you've set up the estate, then that title would then transfer to your heirs. The reverse mortgage would need to be repaid, and typically it's paid from the proceeds of the sale. In any event, as long as that title is in your name, you have full control over the home. You can remodel, you can sell it, you can do whatever. You have full control over it. But then, again, similar to any other mortgage, if you did sell it, that would trigger a repayment provision that would have to be paid. Once it is sold, any excess proceeds over and above the amount required for repaying the loan would then go to the living borrowers, if they're still living, or to their heirs if it's transferred in the estate.
Which is exactly the same as any mortgage, right?
Correct.
There is no difference. It's really kind of a mortgage without payments.
Correct.
Right? We can also use money or create a stream of income from a reverse mortgage, right? Mm-hmm. How does that work?
The proceeds under a reverse mortgage can be taken out in one of or a combination of 4 different ways. The first is a lump sum payment. The second is a payment based on a specific term. So, for example, if you only needed to take a draw under the line of credit for a 5-year period at X amount, then it would be set up to calculate out to that point in time, and then at the end of those 5 years, the term would cease. The third option would be to take what we call a tenure payment, TENURE, which is similar in a way to a life annuity, where you that you could take for the remainder of your life, however much longer that might be. And then the fourth way is to just take it on an as-needed basis, where you can just request a draw based on specific needs. Any one of those ways can be done, and they can be used in a combination of different ways.
Not everyone can qualify for reverse mortgage. What are the qualifications?
Well, the qualifications are fairly basic. First of all, you have to be at least 62 years of age or older. The home has to be a primary residence, and it has to be an FHA-approved residence. And by that, I'm referring to a single-family home, also 2 to 4 unit residential property. It can be a condo, as long as it's on the FHA-approved list. It could even be a manufactured home, as long as it meets those requirements. And the methodology used to determine how much one can qualify is based off of the borrower's age, the interest rate, and the value of the property. And typically, you would see that range anywhere from 40% on the low end up to maybe 60, 70% on the high end. So in other words, a borrower, if they own a home that's worth $400,000, could typically look at something being able to qualify for an amount in approximately the $150,000, $200,000, $225,000.
So if we use a reverse mortgage, doesn't that mean that our heirs are going to end up with less?
That's a good question, and it really depends on what the borrowers do with the proceeds that are available to them. If they are used strategically, and especially in coordination with a financial planner who understands the product well and can interweave, if you will, the things that the reverse mortgage, the flexibility that offers with their overall financial plan, what it can actually end up doing is making their financial plan more efficient in a number of different ways, which would mean that while there may be less equity for those heirs remaining in the home at whatever future point in time the home becomes theirs or is transferred to them, they could end up having a significantly larger amount available to them in actual cash assets through the remainder in their estate, through the retirement planning. Mm-hmm. So we actually see it as a more advantageous way for legacy planning for your heirs, because most children, in spite of what parents might think, the children have always wanted to own this home, we've always wanted to give it, the kids want the house. 0.5% of children who inherit their homes ever end up moving into the home. Normally, the first phone call that they make after the funeral is to a realtor finding out how soon they can list the house. So much better and much more effective to be in a position to leave them cash rather than to leave them with an asset like a home that now they have to figure out how they're going to get it ready to sell.
As I do, holistic retirement planning, there are all kinds of strategies that that we use with a reverse mortgage for those who it makes sense for, right? It doesn't make sense for everybody. Not everybody needs it. But a reverse mortgage can act as a volatility buffer. So if you have a line of credit on your home that you could access, guaranteed at any time, when the market is down, rather than taking assets for withdrawing for income, in those scenarios, if you take money out of the house for that year, you're able to create a volatility buffer, and it sustains a retirement account in a very impressive fashion. And so there really are new ideas and new strategies all around holistic retirement planning, and reverse mortgage is a tool that can make a big difference for a lot of people. So Lynn, I want to thank you for taking your time. I look forward to seeing you in the next episode.